Good afternoon. Once again, we will look into balance sheet preparation. Before we take up a case, a problem, we will have a quick review, right? I have a small exercise for you. Indicate where the items below are shown in the balance sheet. We have discussed what items are there on the liabilities, what items are there to be on the assets, right? We'll have a quick recap of what we have discussed in the previous class. Okay, now credit balance in the bank column of the cash book. Credit balance in the bank column of the cash book. What is credit balance? The credit side is more than the debit side. Where do you show it? Come on, quickly. Okay, now I'll give you the hint. Cash is an asset. An asset account always shows debit balance. Okay, now the bank can have an overdraft, right? So the credit balance means you have drawn more from the bank than what you have deposited, right? So therefore, it is a liability, right? There is a liability you're drawn. Credit balance is shown more means you have drawn more than what you have deposited. Every time you deposit, it shows debit balance, right? So all deposits on the debit, all withdrawals on the credit. If the credits are more than the debits, then it is a credit balance, right? So therefore, it's a liability. Fine. Debit balance to the account of A, who is a customer. Debit balance of customer A. Okay. Customer A. Who is customer A? Customer A is the one who has purchased goods on credit. Okay. Now, what is that? What is he called? What is he called? He is called as debtor. And if there's an amount due from him, what will he do? What will he do? You take it as or treat it as an asset, debtors. Okay? Right. Number 2 is over. Right? Number 3, credit balance. Yeah, you can also check the answers which I am discussing. Number 3, credit balance in account of B, who is a supplier. Credit balance of the supplier. Where do you take it? You will take it in the liability. Why? Why? The credit, liabilities accounts always show credit balance. So who is the supplier? He is the one who has supplied goods to you on credit. On credit means it's a liability, obligation to pay, right? So therefore, you take on the liabilities. Number 4, debit balance in account of C, who is a supplier. Debit balance. Look at this, fourth one. Debit balance in supplier's account reflects the advance given to the supplier. Advance given to the supplier is an asset for you. Okay, is an asset for you. When it is an asset, take on the assets list. Next, credit balance in the account of D, who is a customer. Okay, who is a customer? What is this? Credit balance in the customer means, okay, it is the advance you are taking from the customer. So therefore, what belongs to others is a liability. Okay, that's what you're done. You are taking in liability, current liability. Okay, next is outstanding rent. What is outstanding rent? What is outstanding? All outstanding are in liabilities. Look at this. Outstanding rent will be shown as current liability. Okay. Next, insurance paid for the next year. Prepaid insurance. What belongs to you, but it is with others. You're paying in advance. That's an asset. Okay. When it is an asset, it is taken in the current in the list of assets as current asset. Okay. Next, loan from HDFC Bank for 7 years. What is that? Loan from HDFC. It's a liability. It's an obligation to pay. Okay. Which liability? It's more than 12 months. Therefore, it's a long-term liability. Interest due on loan. Okay. interest due on loan. Number 9. Number 9 is, interest due on loan is the obligation which you had to fulfill. That's a current liability. Okay. And 10 is provision for doubtful debts. What is this? It is a deduction from the debtors. Provision for doubtful debts will be reduced from the sundry debtors under current assets. Okay. Next is 11. Net profit for the year. What is net profit for the year? Net profit is, as I discussed with you yesterday, is added to the capital. Okay. Capital. Next is balance with Citibank. What is this? It is a, I'm sorry, net profit. Machinery. Machinery is the 12th item. What is this? Straight away it is an asset. Okay. It's an asset. Machinery is an asset, fixed assets or long-term asset. Next is accumulated depreciation on vehicle. Okay. Accumulated depreciation on vehicle. Right. This is a deduction. Which item is this? 13th. It is a it is to be deducted from the vehicle value. Okay. It is to be reduced from the value of the vehicle. Okay. Right. Next is cash at Bangalore office. It's a cash balance asset. Okay. Cash balance is an asset. Okay. Which asset? Current asset. Right. Balance with Citibank. What is this? It is a bank balance asset. Okay. Balance with Citibank. An asset. Current asset. Right. So this is a quick, recorder. We had a quick exercise, right? So I didn't have time to ask you because we have very short time to go with, because we also have to complete the complete another problem, right? Now this is the problem, all right? Following is a trial balance of Messrs. Brajesh and Sons prepare final accounts for the year ended 31st March 2013. Okay, so there's a stock as on 1st April 2012. What stock is this? I mean to ask you whether it is a closing stock or an opening stock. What stock is this? What is this stock? Is it opening or closing?
Opening stock.
Opening.
Opening, sir.
So that's 200,000. And purchases and sales. So this is purchase, because purchases always show debit balance. And this is sales, because sales account always shows credit balance. Right. Next is bills receivables. Okay. Bills receivables, asset, debit. Okay. Returns. Okay. Now, if purchase is debit, purchase returns is credit. If sales is credit, sales returns is a debit. Remember that. Okay. This return which I have highlighted is sales return, and this return is purchase return. When purchases is debit, purchase returns is credit. When sales is credit, the sales returns is debit. And carriage inward, it's an expense, debit. Okay. Debtors and creditors. Debtors is an asset. Asset account always shows debit balance. Okay. And you have another 400,000 which is in credit. Okay. And creditors account is a liability account which shows always a credit balance. Carriage outward. Okay. When you sell goods, you may have to transport or ship the goods. That's 40,000. Right. Next, discount. Okay. Discount. If it is discount allowed, which is a loss for you, or you treat it as an expense, it's a debit item. If it is an allowance or discount received allowed by others, it is income. Okay. Right. It is credit. Discount received is gain, credit. Okay. And discount allowed is a loss, debit. Right. Salaries and wages put together 220,000. Insurance expense 60,000. Rent 60,000 expense. Wage expense 80,000. right? Bad debt is a loss, 10,000, debit. Okay, furniture is an asset, debit. Asset account always shows debit balance. Capital account, 500,000, credit. Capital account is a liability account, therefore always it shows credit balance. Okay, right. Rajesh, drawings. Drawing is a deduction from the capital. Okay, it's always debit. Loose tools. Okay, these are inventory kind, they are spares and tools, right? It's an asset, short-term asset. And printing and stationery expense, debit, right? Advertising expense, debit. Cash in hand is an asset, debit. Okay, cash at bank is an asset, debit. Petty cash is an asset, debit. Machinery, an asset, debit. Commission given is a loss. Okay, therefore it is debit. Commission received is a gain, therefore it is credit. Okay, so this is a trial balance. The trial balance is tallied 44,85,000. And there's an additional information given. Adjustment. Stock on 31st March was valued at cost price. Okay, 420,000. And market price of 4 lakhs of 400,000. Now, which value shall we take? There are two amounts given, 420 and 4. Which item shall we take when we are valuing the stock? Principle of conservatism. Whichever is low, whichever is lowest, this is being lowest, we will consider this. Depreciate furniture at 10% on machinery and 20% on depreciate furniture 10%, depreciate furniture 10%, and machinery 20% per annum on reducing balance method. Rent of 5,000 was paid in advance. Okay, rent of 5,000 is paid. Prepaid rent is an asset. Okay, is an asset. Right, and we calculate 10% on furniture. Where is furniture? Where is furniture? Yeah, this is furniture. 10% on this, 4 lakhs is 40,000. And on machinery, 3 lakhs is the machinery. On this, 20%. Okay, 60,000 is the depreciation, right? This is on reducing balance method. Fine. Salaries and wages, but wages due but not paid, 30,000. Outstanding salary liability. Make provision for doubtful debts at 5% on debtors. So this, where is debtors? Where is debtors? Yeah, this is debtors. So make 5%. Okay, 10% is 20,000, 5% is 10,000. So 10,000 is to be deducted from the debtors. This is provision for doubtful debts. Commission receivable, 5,000. Okay, income due but not received. Okay, 5,000. Right, and that's an income. It has become due. Right, it is, you're supposed to receive but you're not received. It's an asset for you. Okay, right. Let's jump into the solution. Now this is a template for trading account. Right, trading account. Okay, now in trading account we look into only the items pertaining to factory, or if there's no factory, we'll look into only those things which are, which are brought into the warehouse and till the sale. Okay, like you have opening stock already in the go down and you have purchased 22 lakhs worth, right? Now look at this. What is this 2 lakhs? You take this 2 lakhs of opening stock, debit it. The trading account always is debited with opening stock, 200,000. And you have added some purchases, right? Purchases, 22 lakhs. And out of this 22 lakhs, you have returned 50,000 worth goods, right? So 2 purchases, less returns. 2 purchases, less returns. 22 lakhs minus 50,000, 21 lakhs 50,000 is the net purchases. And you will also take the carriage, okay, transportation charges. That's carriage inward means to bring this material, 21 lakhs 50,000 worth material, right? Whatever transportation that you have incurred, that's carriage inward, 50,000, right? And you will take just wages and salaries, right? That's 80,000. Then on the right hand side, the credit side, you will take the sales. Okay, sales. Where is sales? Where is sales amount? Yeah, where are sales? Purchases and sales. Yeah, 35 lakhs is the sales amount. So take the 35. And do you have any returns? Yes, there's a return of 100,000, 1 lakh rupees. Let's come here. 35,000 is the sales amount and less sales return of 1 lakh. And 34 lakhs is the net sales amount. Net sales amount. Okay, now when you're taking opening stock here on the top, on the left side, closing stock here on the bottom, on the right side, closing stock of goods. Where do you have closing stock? The closing stock that you got here, you know, in point 1 of the adjustment. Okay, what is this? You have taken here 4 lakhs. What's the principle? Principle of conservatism. What is that? Whichever is low. 420 is the price at which you bought, but presently its market value is only 400,000 or 4 lakhs. So whichever is low, it is 4 lakhs, right? We take that, right? So 34 plus 4, 38 lakhs. And look at this, 2 plus 2150, 2350, and 2350 plus 50, 24, 2480 is the total of the debit side. The difference is 13 lakhs 20,000, 13 lakhs 20,000. Okay, now what is this? The difference is balancing figure, therefore we are writing it as carried down, carried down. Okay, so what is this carried down amount? This is the gross margin or gross profit. Okay, gross margin or gross profit. And this balancing figure is brought here. Look at this. This 13 lakhs 20,000 is brought here. 13 lakhs 20,000. Okay. And this balancing figure is shown on the debit side in the trading account. Trading account. In the profit and loss account, it is shown on the credit side. Okay. So by gross profit 1320. 1320. Okay. Now, whatever left, whatever are the items left over, whatever items left over, okay, those items you will take in the profit and loss account. For example, stock, opening stock. Did you consider? Yes, already considered. Purchases and sales. Did you consider? Yes, already taken. Bills receivable, you did not take. We will come back to that. Returns, did you consider? Yes, we have considered. Okay. And carriage inward, did you consider? Yes, we have considered. And debtors and creditors is an asset. Okay. Carriage outward. Okay. Carriage outward. Right? Carriage outward. Carriage outward. Look at this. Carriage outward. 40,000. Okay. Next carriage outward. Where is this? Yeah, carriage out to 40,000. Discounts 5,000 and 5,000. Okay, both of 5,000. So discount, one is debited, another one is credited. Look at this. So discount allowed is this. Look at this one. Discount allowed is debited. Discount received is credited. Discount received is credited. Okay, next. What is next? Yes, discount is salaries and wages, right? If it is wages and salaries, you're taking in trading account. If it is salaries and wages, you will take this amount in the profit and loss account. Okay, salary, wages and salaries is taken here. Salaries and wages is taken in the profit and loss account, 2,20,000. And there is some amount left over in the adjustment with regard to salary. Where is that? Fourth point. Salaries and wages due but not paid. Outstanding salary of 30,000. What is that? It has become due but you did not pay. Okay, that's an outstanding 30,000. 220 plus 30, 2,50,000 is the total amount of salary which has become due. 2220 which is paid, 30 which is due. The total amount of salary for the year is 2,50,000. Let's come to the next item. So insurance, okay, rent, okay, wages and salaries, it's already covered. We don't take it. So we'll start with insurance 60,000, rent 60,000, and bad debts 10,000. All these three will take as expenses in the profit and loss account. Okay, like insurance 60,000, rent 60,000. There is an adjustment for rent. Okay, there's an adjustment. Look at this one. Rent 5,000 was paid in advance. What do you do? What do you do? If it is outstanding, you would have added. Now this is paid in advance. Okay, it has to be deducted, right? Had it been outstanding, you would have added this 5,000. Remember, this is paid in advance. Remove it so that the actual amount of rent comes. That's 55,000. Next is bad debts 10,000. Bad debts 10,000. Where is bad debts? Look at this. Bad debts 10,000. And next, next bad debts is over. Furniture, drawing, loose tools, advertising 50,000. Advertising 50,000. So where do you take advertising? It's an expense. Okay. What do you take here? Selling, administrative, and distribution expenses. So administrative we have taken. Now this is selling or advertising expense. Okay. Where is that? Advertising 50,000. 50,000. Right. And what else? What else? What else? Right. Advertising is over. Petty cash. Commission 10,000, 30,000. Commission 10,000 is commission you have paid. Commission 30,000 is the commission you have received. Okay, if it is paid, debited. If it is received, it is to be credited. Okay, received 30,000 is received is credited. Okay, paid is debited. Paid is loss, or it's like expense. Okay, received is a gain. Okay, and there's an adjustment here. Okay, commission receivable 5,000. It is due. It's an asset. Okay, and also it is added in the profit and loss account. 30 plus 5, 35,000. Okay, 35,000. Right, and I have lastly, something to tell you. Depreciation on furniture and machinery at 10% and 20% respectively. What's the value of furniture? The value of furniture is 4 lakhs. Okay, 4 lakhs, and the value of machinery is 3 lakhs. Okay, so on 3 lakhs, 20%. On 4 lakhs, 10%. Look at this. Yeah. Depreciation on machinery, furniture, 10% on 4 lakhs, 40,000, and 20% on 3 lakhs, 60,000. So both on furniture and on machinery, 40 and 60. Okay, that's done. Did we miss anything? Can you please check, Kapish or anybody? Kapish or anybody? Anybody can correct me if I have slipped or skipped or any of the items. Yeah, this is the problem. Can you please check through? We have some items that we have not taken. That is for the preparation of balance sheet. We will
balance
take, yeah.
You took everything, sir.
Yeah.
Everything is taken, sir.
Everything is done. Okay. How much time do we have more?
20.
Okay.
15 minutes, sir.
Yeah, we have sufficient time. Right. So this is what about profit and loss account. Okay. We'll scan through once again. Salaries we have taken, depreciation, machinery, insurance, rent, printing, and stationery. Printing and stationery, this is what we have missed. Okay, and advertising, carriage outward, discount, bad debts, commission, provision, everything is taken. And this side, okay, the gross profit brought down, and the gains that we receive. This is the gain that we received, that is discount received, and this is another gain. Discount and commission are general items on the profit and loss account credit side. So the total is 13,60,000, and this is the highest total for this problem. So you drop that total on both the sides. 13,60,000 on the debit side also. And if you take the total 250 plus 40 plus 60 plus 60 plus 55 plus 30 plus 50 plus 40, 5, 10, 10, 10, all put together, you will get a total. Okay, we are not totaling, but the difference between, okay, all this amount, okay, and 13,60,000 is 7,40,000. 7,40,000 is the difference between 13,60,000 and, okay, the total of all these amounts starting from this 10,000, okay, about 2,50,000. Right. So what is the 7,40,000? It is net margin or net profit. What is this? Balance carried down or carried down. Okay, it is balance carried down, balancing figure. Right. Now, this will be taken in the balance sheet later on. We'll check in the balance sheet. Balance sheet. Look at this, you have to write the wordings. Trading account for the year ended. Profit and loss account for the year ended. Okay, and now balance sheet as on 31st March 2013. And you take liabilities on the left side, assets on the right side. Okay, so if you want, you can take an inner column like this. Otherwise also, you can do these calculations in the particulars column. But there's an amount column on the debit, there's an amount column on the credit, right? So we'll begin, right? We'll begin. What all the items that you have skipped here, you will take now there in the balance sheet, right? Stock you've taken, okay, opening stock you've taken, purchase sales you've taken, bills receivables, okay, 50,000. Did you take this amount earlier? No, we didn't take. So we'll take it here, right? We'll take it here. Bills receivable, okay. Bills receivable. Where is bills receivable? Yes, bills receivable, 50,000. Okay. Next is, yeah, returns we have taken, carriage inward we have taken, debtors and creditors. Debtors and creditors. So debtors is an asset, creditors is a liability. We'll take both of them in their respective sides. Look at this. Okay. Sundry creditors 4 lakhs, sundry debtors, okay, sundry debtors 2 lakhs. And what is this 10,000? This 10,000 is the provision that you made as per the adjustment. Where is that adjustment? This is the adjustment. Make provision for doubtful debts at 5% on debtors. Okay, the debtors amount is 2 lakhs, and provision on that is 5%. 5% of this 2 lakhs is 10,000. After deducting this provision, the net debtors is taken in the amount column, 1,90,000. Okay, let's scan through once again our trial balance. So debtors and creditors is over, carriage outward over, discount over, salaries and wages completed, insurance completed. Is there any outstanding and prepaid insurance? Yeah, if that is there, we have to appropriately treat it. Is there any insurance adjustment for insurance? Is there any adjustment for insurance here? Please check it along with me. I think there's no adjustment. Just leave it. Rent. Is there any adjustment for rent? Please check it. Please check it. Rent 500 was paid in advance. Okay, what belongs to us but it is given to others is an asset, right? What is that? Rent paid in advance 5,000. It's an asset. Rent paid in advance. Okay, rent paid in advance is an asset. Okay, and
Sir, rent will write in profit and loss account also, right, sir?
profit and
Because we are
loss
paying
account
right.
deduction, yes, we have done it here. Profit and loss account deducted. 60,000 is rent
Okay.
paid. Out of this, 5,000 is, belonging to the next year, right? We have
Yes.
taken net
Yes,
amount
sir.
here. This 5,000 again we will take in the
In the
balance
asset
sheet
side.
as asset. In the
Okay, sir.
balance sheet as
Yes, sir.
asset.
Yes, sir. Okay, sir.
Next item is, where is this? Yeah, rent is over. Is there any other adjustment for rent? Nothing. Next is wages and salaries. Is there any outstanding for wages and salaries? Outstanding wages and salaries. Yeah, there is no adjustment if I'm not wrong. Yep. You also keep checking along with me. Yeah, there is no adjustment. Right. Then bad debts, 10,000. Bad debts, 10,000. There's no adjustment for this. Provision for doubtful debt, we have already taken. Furniture, yes. Furniture is an asset. What's the adjustment? The adjustment for furniture is provide 10%. Furniture value is 44 lakhs and provide 10% depreciation. The net of asset you will take in the amount column. Furniture 4 lakhs, less depreciation 10% of 4 lakhs, 40,000. Take the net amount of 3,60,000 to the outer column. Next is, yeah, Brajesh capital. Capital account always shows credit balance and it is a liability. When it is a liability, take on the liability side of the balance sheet. Brajesh capital, okay, 5 lakhs. And out of this 5 lakhs, this fellow has withdrawn 70,000, then deducted. And during the year, you made a profit of 7 lakhs 40,000. Right, this profit is added to the capital, 7 lakhs 40,000. Are you getting me? If it is a loss, then we would have deducted it. Net loss is deducted from the capital. Net profit is added. Look at this, the order. There's a capital of 5 lakhs and this fellow has withdrawn 70,000. Deduct this, okay? And if there's a profit made, add it. If there's a loss made, less it or deduct it. The net amount of capital is 7 lakhs. I'm sorry, 11 lakhs 70,000 for this year in this case. Okay, right. Next is, where are we? Yeah. Loose tools, 1 lakh. Tools is an asset, right? It's a short-term asset. It's an asset, current asset. Where is that? Loose tools. Where is that one? Yeah. Loose tools, asset. Spares, nuts, bolts, and all those things, asset. Actually, it is a current asset, but it is not taken there. Printing and stationery is already taken. Okay, advertising is taken. Cash in hand as an asset. Cash in hand is an asset. Okay, cash in hand. Where is cash in hand? 44,000. Cash at bank also is an asset. Okay, and if it's a petty cash, 5,000 also is an asset. Look at this. All cash items, whatever it is. Cash in hand 45,000. Cash at bank 2 lakhs. Okay, and petty cash. All these three are assets. All these three are assets. Okay, yeah. Cash in hand 45, cash at bank 2 lakhs, petty cash 5 lakhs. All are assets. Right? Then machinery 3 lakhs. Okay, and what's the adjustment? 20% to be provided as depreciation. 20% of 3 lakhs, 60,000. Take 3 lakhs in the balance sheet in the particulars column or in the inner column. Machinery 3 lakhs, less depreciation of 60,000. 60,000. Okay, the net amount of machinery is 2 lakhs 40,000 in the amount column. Okay, next commission is already taken. Right now, let's, yeah, trial balance wise, we have taken everything in the trial balance. I don't know if I have slipped anything or skipped anything. Please do let me know. But let us once again scan through this. There's a closing stock of this which we have taken. Number 1, we have already considered. Depreciation already considered. Okay, both in profit and loss account and balance sheet. Rent paid in advance also is considered. Salaries and wages also is considered. Okay, this 30,000 is considered. Provision for doubtful debts is considered. Commission also is considered. That's it. Every bit of the case we have considered. Not a single item we have slipped. Please do let me know if I have slipped, okay, by mistake. Right. Let us take the total. The total of, okay, liability side, 1170 plus 4 lakhs plus 30 is 16 lakhs. Okay, 16 lakhs. All right. So 1170 plus 30, 12 plus 4, 16 lakhs is the total of liability. And let's look at the assets. 360 plus 240. How much? 360 plus 240. 6 plus 1, 7 plus 4, 11. Okay. And go on adding like this. You will get 16 lakhs. The balance sheet tallied. Balance sheet is tallied. The left hand side, the liabilities are equal with the asset. The balance sheet is tallied. It should tally for the reason that you cannot spend on these type of assets. Okay, you cannot spend on these type of assets beyond what you have. What you have is this. With these financial resources, you're spending on this. So therefore, balance sheet should tally. That's it. We will stop it here, and I request you to ask for any doubt. If we have time,